Good morning, everyone, and thank you for joining this captive insurance company webinar training session. This is targeting both clients of captives as well as referral associates who want to better understand captives and introduce them to their client base. We're going to focus on captives as they apply to successful, closely held businesses and professionals, but we'll touch on the broader captive marketplace as well. This segment 1 is pretty narrow in its scope. It should take 5 minutes or less to complete this webinar. We're going to discuss what captives are, what their benefits are, why the growing interest in them, and the size of the marketplace. I am Tom Cifelli, your presenter. I'm an attorney. I've practiced public accounting and other professions. I've helped over 500 businesses create captive affiliates to help improve risk management for those businesses. So what are captive insurance companies? They're simply corporations or other legal entities that get a license to sell insurance. That license is limited. They can't sell insurance to the general public. They can only sell it to entities that are somehow affiliated or related to the owners of the captive. AM Best definition is a little dated. I won't read it, but it's too narrow for where the captive industry is moved today. What are the main benefits of captives? Well, risk management, improving risk management. That includes reducing insurance costs, expanding coverage in areas that the commercial markets are inadequately addressing or too expensive to cover. It's increasing claims controls. It's improving the loss and safety aspects and practices of businesses. That's the primary focus of captives. That's what the focus should be. If a business is not using captives for those primary purposes, it really shouldn't be involved with a captive insurance company. There are certainly other benefits as well, as we'll get into in more detail later in this webinar series. So what are the key benefits of captives? This chart compares them to self-insurance and commercial insurance. It graphically illustrates just how powerful captives are, especially if you have some experience in advanced captive design. Commercial insurance really only achieves 4 primary objectives. Self-insurance 3 or 4. Captive insurance, as you can see from this chart, 13 or more, designed correctly, especially when used by closely held businesses and successful professionals. So why is there a growing interest in captives today? Most people really never even heard about them even 10 years ago. So why is that? Are they new? No, they're really not new. Captives have been around for hundreds of years. They've been around formally for over 50 years. But the main reason there's a growing interest today is, in particular in the U.S., is the IRS has changed its position. Prior to 2002, they routinely challenged captive arrangements, and so only very large global organizations, Fortune 500 type companies, were utilizing captives. And those organizations just had huge commercial insurance expenses and other insurance needs for their operations, and they needed customized insurance programs for that. Since 2002, the IRS adopted 3 safe harbor rulings, their revenue rulings 2002-89, 90, and 91. They basically have created a playbook, rules of the road, so to speak, so that now professional advisors in the U.S. of all types, lawyers, accountants, insurance agents, financial advisors, are more comfortable introducing captives to smaller and smaller client businesses. What's the size of the captive industry? 30 years ago, there were about 500 licensed captives globally. They were all offshore. None of the U.S. states had statutes to license and regulate captives. Since the 90s, U.S. states have started to authorize captives. Over 32 states today do have captive legislation in place. 5, 6, or 7 states are experiencing significant growth. Most of the newly formed captives today are in U.S. domiciles. About half of the 7,000 captives licensed today are owned or controlled by U.S. enterprises. And most of the growth today is in smaller, closely held businesses and professional companies. But the growth is not restricted to the U.S. Captives are growing globally. I expect in a few years that there will probably be more captive formations by non-U.S. companies than by U.S. companies, just because the risk exposures in the world continue to increase. Businesses are more global in their footprint and their supply chains and in their customer bases. And litigation and regulatory risk continue just skyrocketing. The U.S. in particular, where I think 90% of global lawsuits are filed, is just an increasingly complex business environment, and we're seeing captives designed correctly having tremendous benefits for both private sector and nonprofit and government sector entities. That's the end of video number 1 in this training series. Hopefully you'll watch others. They get into much more detail, and there will be about 11 total. Where they're not all complete, but maybe by the time you're watching this, they have been. Thank you for joining us, and we look forward to you watching other of our videos and visiting our websites for much more in-depth information. These are the leading websites in the industry, so they're certainly worth you investing some time to explore their content.